Good morning, good afternoon, group. Common question, how much money do I need to get started investing in rental properties? Well, I'm gonna answer that. And if you have any questions like this or any other rental property related investing questions, you should join me on our show, the Not Your Average Investor Show. It is every Tuesday at 12:30. There's a link in the description. You can go to jwbshow.com. So how much money do you need to invest in rental properties? Well, I'm gonna give you the simple answer first. So a typical rental property in Jacksonville will cost between $160,000 and $200,000. So if you're putting down 20 to 25% and you're financing the rest, that would put you at a minimum of about $40,000 to invest in one rental property in Jacksonville, Florida. So that's a simple answer. $40,000 at a minimum, but let's take it one step farther. So when clients come to JWB, we always want to understand a few things. Why are they investing? What's their goal? How much capital do they have to invest? And we use that to understand how many rental properties they should have in their portfolio. And I can see we've got 5 folks walking with us here. Appreciate you all being here. Let's see, we've got Malachi, we've got Brooke. Brooke's a friend from high school. Hey Brooke, how are you doing? If you're on here now, let me know where you're from. Put it in the comments. It's always nice to find out where folks are from. So we're talking about how much money is necessary to invest in rental properties. So we always try to understand what the client's goal is, how much capital they have, and then we use that to determine how many properties they should have in their portfolio. And what we always let new clients coming on board know is that we want them to get to 3 properties in the first 1, maybe 2 years. And we do this for a reason. It's because if you only have 1 rental property, that is not a consistent portfolio. You need 3 to be consistent. And the reason why most people are leaving the stock market and coming to rental property investing, or leaving oil and coming to rental property investing, is because of consistency. They want a consistent performing asset, and you just can't do it with 1 rental property. So we talk about this early and often. See, what happens is when you own rental properties and your houses are rented, what's happening is you are overperforming. You've got this resident in place, they're paying rent, and you're having much lower maintenance and probably no vacancy cost because you've got a great resident in there, right? So what you're doing is you're building up a cash flow surplus. You're overperforming. And then what happens is when that resident leaves, because eventually they all do, right? When that resident leaves, you're gonna give some of that back. You're gonna give some of that cash flow surplus back. You'll spend a couple $1,000s, put in the house back in a great rental shape, and then you'll lose a month or maybe 2 of vacancy cost. And so you're giving it back, but you're sort of playing with the house's money. So if you only have 1 rental property, I don't care when that happens, if it happens 4 years down the road, right, you're still gonna have great years, and then when they leave, you're gonna have a bad year, right? And that's not why you came to rental property investing. You came because you wanted consistency. So that's why we work hard with clients, and we tell them right up front, we want you to get to 3 properties. It's because we can't perform and be consistent unless there's 3 assets, right? It's just not possible with 1 rental property. And here's the thing that a lot of turnkey companies won't tell you. I only know this because of experience of owning rental properties for many years now, is that when you own 3 rental properties, there is always gonna be one of them that has an issue. And if you own more than that, like I do, right, they're gonna have issues. You've got people living in your home who, you don't know them and they're living in your home, right? You're gonna have issues. So we tell them that. The key is that you gotta have 3 rental properties, because if you own 3, what's gonna happen is in JWB land, the residents stay for an average of over 4 years. And so the chances are, if you own 3 rental properties for any amount of time, what's gonna happen is you're gonna have 2 of those rental properties are gonna be overperforming, and you're gonna have 1 that always has an issue. And some of our best performing clients will tell you this is exactly the way it is. And that's okay, because those 2 that are overperforming are offsetting the 1 that is having an issue at that time. And then fast forward years down the road, the other 2 are gonna be overperforming. And then the one that you loved in the past is gonna be underperforming now. It's this carousel. And so this is how you build a consistent rental property portfolio. This is how you get that consistency that you're looking for when you've made the decision to come from the stock market into rental property investing, you got to have a diversified portfolio, which really starts at 3 rental properties. So there you have it. That's the answer to how much money you need to get started and how to build a consistent rental portfolio. For these questions and anything else involving JWB, rental property investing, Jacksonville, Florida, join us on the show. It's Tuesdays at 12:30 Eastern. The link is in the description at jwbshow.com. I'm out.